when we talk about assets, we tend to focus on equities. They get a lot of attention, but we've got credit and debt markets as well. Where are we on things like high yield?
Nice to be with you today, David. Interestingly, high yield has been following the equity markets since the crisis. And in fact, high yield spreads came in to about 760 basis points, and high yield is up about 4.5% for the last quarter, and another 70 basis points in the last month, which is not what you would expect with the kind of economic news that we're seeing.
The Fed is warning us about the possibility of really some asset price diminishment. At the same time, are they contributing to part of the asset prices that are there now with their essentially blank check on the liquidity front?
You're absolutely right. The $2 trillion liquidity package that came in through the Fed mainly has created this enormous liquidity, but as we're seeing, as the crisis is going on for a longer period and may go on beyond the potential opening of various states, what you would expect is that many companies are going to start having solvency problems. And just like with oil prices that were low, people did not start driving. If interest rates are incredibly low, or maybe even in the negative range, as the future markets are showing they might be, we're not going to be borrowing more necessarily, and if we want to, banks may not be lending to us. So that push has not necessarily turned into creating demand for goods and services, and so therefore I think what the Fed is trying to encourage everyone to do is maybe for the government to start looking at fiscal policy.
Afsaneh, as an investor, what are the assets you're looking at that may be a little bit more protected? One of the things you've talked about before on this program is ESG, and various people are saying ESG is actually holding up better than one might have thought.
You're absolutely right. With ESG, what we found is that some of the stocks that we had invested in were actually outperforming regular markets, the total S&P, by more than 5%. Over this period, which is quite a large amount of alpha. We also saw that even the ETFs were showing that in Europe, for example, they were outperforming the general index, and in the US, the ETF that is sort of an ESG ETF was outperforming around 2%, which is also quite significant during this period. The other thing I'd say is that we also saw inflows of assets into ESG, even ETFs, not just private funds, which has been more the dominant form of investment in ESG.
I suppose, Afsaneh, the question is why? Why do companies that pay more attention to environmental, social, and governance, why would they do better in this particular crisis?
The main reason is that you have the environment, but then you also have the S, which stands for social. So those companies have been taking care of their people more and better, which means that you don't have the problems you've seen, let's say, in the meatpacking industry, where people got sick and died, and that impacted the whole industry. If you are taking care of your staff, if you are taking care of your teams and making sure they're healthy, they're well paid, it also means that they will be able to work even during these difficult times, and they will be more productive. So I think that's one reason. The other thing, of course, is that many of these ESG funds were not investing in oil and gas. But the interesting thing is that it's not just a negative part of this, which is not having invested in oil and gas. It's actually what they have invested in, which is health sector, telemedicine, education, as well as clean energy that has been benefiting during this period.
Afsaneh, another thing you have a lot of experiences in is in emerging markets.
Yes.
What's going on in emerging markets? As I understand it, there's some divergence there among the different kinds of emerging markets.
Huge divergence, David. In terms of the emerging markets, it now means something very different. Basically, almost 80% of the emerging market index now is Asia. If you look at North Asia and South Asia and Southeast Asia, that is 80% of the index. Even 10 years ago, it was only 55% of the index. More importantly, what we're looking at right now is that within EM, for example, China was down only 5%, when overall emerging markets was down 18%, and overall US markets were down, depending on what index you look at, 12 to 14% over the last few months. Similarly, the China equivalent to the Nasdaq is actually up 18%, which is quite significant. So what you're seeing is not only divergence between countries. While Brazil and Russia were down 28% during this period, China was down only 5%. Korea and Taiwan were down somewhat. But the point is that you have divergence among countries, and then you have divergence among the sectors. And the other thing I think worth thinking about in emerging markets is whether India will be the next China.
Well, take us through that. That's quite a notion. If India's the next China, how would that work?
Basically, Prime Minister Modi has come out recently with a huge package, which is responsible for about 10% of the GDP, equivalent to 10% of their GDP, which is significant. That also, like our package, is mainly concentrated on monetary policy and directed towards the poor segment of the population and the middle classes, trying to get sort of bread on the table and some basic services to low-income families. But also he has started, seems to be more seriously working on laws and regulations, which, as you know, have been deterrents to investors coming in, or large investments being made in India. Just in the last 2 weeks, there were a huge amount of investments being made by Facebook and Vista and Silver Lake, for example, Enjoy, which is a technology platform which is expanding very rapidly in India. Similarly, we saw the news about Apple talking about moving up to 30% of their production capacity into India from China. The companies, as they start tiptoeing into India, trying to see what their experience is, if they do have good experience, I wouldn't be surprised if they push for some level of supply chain diversification starts with a larger country like India.
At the same time, is India more vulnerable at the moment to the virus itself? China's somewhat ahead. Where is India?
Absolutely. India had one of the most significant lockdowns. And despite that, Mumbai is still one of the highest levels of death and sickness as we speak. So while they have lockdown, it's very hard if a large share of your population is living in slums or in a very difficult situation to have social distancing. Similarly, they don't have access to ICUs for those kinds of populations, which has been a big problem in India in terms of inequality of access to health system. But I think that is the negative part of India, which to some extent Prime Minister Modi has been trying to address. And the other side of it is the very strong technology bent, the very strong technology within health sector. And then, as you know, they always were ahead in terms of bringing their technology to the US.